Good evening and welcome to Face the Nation. I'm Fundo Mabalani, standing in for Clement Manyatela this evening. It's great to have you with us on the SABC. So on the show tonight, we'll speak to the South African Chamber of Commerce in the United States on the 90-day pause on reciprocal tariffs and retention of that 10% baseline. Uncertainty persists even after the latest move. So we'll be in conversation with Aubrey Sibanyoni from the Chamber of Commerce. And then after that, we'll speak to economist Dr. Azar, Jammine, as well as Dr. Lebohang Pheko on that erratic decision, which is, of course, sending global stock markets into a tailspin. More importantly, we want to know how the latest move will impact South Africa. Then later, we'll speak to Border Management Authorities Dr. Michael Masiapato on the unveiling of the drones that will be deployed across the country's border for the first time over this Easter weekend to monitor illegal activity at ports of entry. But first, my comment. So the latest move by U.S. President Donald Trump to pause the reciprocal tariffs by 90 days for 75 countries but retain that baseline 10% has seen markets respond positively, with Trump, of course, claiming victory for the market's rebound. But realistically, uncertainty persists and the markets have not fully recovered from those earlier losses. Now, the big debate is whether Trump capitulated, given the global market's response to the tariffs, or the Trump administration, as they would want us to believe, is that this was all part of the Trump grand plan to reset the table, if you will. A page from his memoir, Art of the Deal, where you create a lot of panic in the world, then have everybody knocking at your door to negotiate new terms. Well, his recent comments at Congress suggest this was part of the plan, as he's been gloating about the countries indicating their intention to negotiate. Listen to this.
Don't let some of these politicians go around saying, because I'm telling you, these countries are calling us up, kissing my ass. They are dying to make a deal. Please, sir, make a deal. I'll do anything. I'll do anything, sir. And then I'll see some rebel Republican, some guy that wants to grandstand, say, I think that Congress should take over negotiations. Let me tell you, you don't negotiate like I negotiate. Congress takes over negotiating. Sell America fast because you're going to go busted. You don't.
Not so diplomatic, but as the saying goes, the road to hell is paved with good intentions. Trump may have the intentions to benefit America through the manufacturing industry, but that level of protectionism, that aggressive posture towards foreign countries has done very little good for the American economy. The series of policies have all but upended the global trade system and wiped trillions of dollars of value from the face of the earth. That's all that's been actually achieved since the announcement of that Liberation Day tariff. Havoc. And this segues us perfectly into our question this evening. We're asking, what are your views on the abrupt 90-day tariff pause for 75 countries? Did he capitulate? Did he blink, as some say? Share your thoughts with us by sending us your WhatsApp voice note to 078-459-1897. Remember to tell us your name and your surname and where you're sending that voice note from. And please do keep your voice notes at 30 seconds or send us an X on @FaceTheNation SABC. We start with this story now. Experts are warning that African countries will bear the biggest brunt of job losses and trade economy deficit should the US-China tariff war escalate. This follows US President Donald Trump's announcement of over 100% trade tariffs on China. There are fears China could retaliate against the US and with its own tariff increases with dire consequences for the global economy. The US and China account for around 43% of the world's economy. Tonight we speak to the South African Chamber of Commerce US lead in New York, Aubrey Sibanyoni. Aubrey, welcome to Face the Nation. Thank you very much for joining us on the program.
It's a pleasure to be here.
No, it's a pleasure to have you with us. What a week it's been, Aubrey. The markets plunged at one point. They've now rebounded, but not without great financial losses. Your reaction as the South African Chamber of Commerce in the United States on just the latest decision to pause those tariffs?
Well, it's interesting because the tariffs imposed, especially to poor countries, we know it's going to have adverse effect. But what's really interesting is that these tariffs had really hurt the American people in a big way. We've seen the stock market. In fact, we have seen one of their U.S. retirement plans called 401k that has dropped about 8-9%, wiping out about $1 trillion in the marketplace. And so it is indeed Trump taking a step back, but in the long run, it's sort of win because he has that, blanket of 10% going forward. My worry is what is going to happen in about 90 days. I think ultimately might be scrapped, but we just don't know. And this is the issue that it keeps the market very much jittery, uncertain, very much afraid.
I suppose that's why the uncertainty still persists, if you will. I want us to touch on the impact of that 10% baseline for the broader public. But let's start with this moment itself, this decision. Was it, given the financial losses on the stocks, was it possibly him here backtracking, or really this was part of the grand plan, as some within his administration would want us to believe?
It is definitely not a grand plan of sorts. I mean, after all, Microsoft had a huge plans to build a data plant in Ohio for $1 billion. They put a pause on that. He's literally have been getting emails and phone calls on an hourly basis. All the business communities were basically crying out loud and said, hey, this we cannot have. I mean, the bond market, we've never seen these lows and these pullouts, especially from Japan. So it is very much concerning. It's not his doing. It is the market talking to him. Hopefully, he would ultimately scrap it entirely within the 90 days. I don't think it's going to happen because some egos are involved. But I really hope that cooler minds will prevail. Hard to tell in Washington, D.C. We are here in New York. We see it today, so we don't know.
But then now you get the U.S. president claiming victory for the rebound in the markets. What is all of that then? Because many are saying, if anything, we shouldn't read much into this rebound. What it really is just regaining of the losses post that announcement of the Liberation Day tariffs.
The problem is it's not really a regainment because the losses that were there, they are not 100% there. For example, so far the market has done well, but it's only operating at about 60-80%. What happened to that 10%? It's going to take much longer to recover. So I think ultimately the leadership in business, especially private sectors, I've gave an example about Microsoft, those guys spoke. And somehow, in some shape or form, he kind of listened. He takes pride in the sense that he may not get his 30%, 75% in different countries where he, implemented the tariffs. But the idea that he's got 10%, to him is sort of like this victory lap, per se, and he's going to ride that to the sunset.
But it's 10% for now. We really don't know beyond the 90 days. But let's talk about that 10% baseline that comes into effect in the interim. What impact will it have specifically on South African goods?
It'll have a tremendous negative impact. Because remember, United States and South Africa, the partnership has been for decades, if not longer. And so the idea of purchasing products from South Africa, having to have the United States buyers pay that 10%, it's a negative impact. And of course, from South African guys who wants to do business here, when they think about supplying the U.S., they're also thinking about being hit with this tariff. So nobody really wins. I really hope that cooler minds will prevail. I'm really proud of President Ramaphosa. Stay calm, collected. And I think that's going to pay dividends down the line. I don't know if it might turn on him so far, but it looks like Ramaphosa is standing on good ground.
Yeah, at least on the side of South Africa, they have indicated that there will be no retaliatory tariffs. Instead, they want to head to the negotiating table. But we also heard from the Ministry of Trade and Industry that they're mulling expanding incentives to shield the vehicle industry specifically from these tariffs, although they're still at the conceptualization phase, of course, of this. So meaning there's just merely an intention at this point, not necessarily a full plan. So how could South Africa, though, go about cushioning these industries during this period of great uncertainty?
I think that, so from myself representing Heracles Investment Partners, a private equity fund specializing in investing in South Africa, we are looking at a number of investment deals there. Our investors have not changed any decision or reversing the decisions. They're still very much interested in investing in South Africa and really investing millions of dollars. So it's not just a talk, it's what we are doing. And also from a South African private sector perspective, We see some wonderful investment opportunities that they want to come to the U.S. and partake in the United States, market and have some margins here. And our job really is to foster those bridges. So you have two tiers. We got the political side, but you also have the private sector side. On the private sector side, we continue doing what we've always been doing. I think, so we would be the gatekeepers per se, that if we continue doing these deals at this high level, that politically that would sort of like fall in line. But again, it is intimidating because we are asking U.S. investors to invest in South African billions and millions, but we are also trusting South African business community to come and operate in the U.S. without having to be threatened, petrified. So it's a delicate balance. We would leave the political things for the politicians. Us in private sector, we want to continue doing business.
It's quite heartening, I must say, because many have been saying, specifically analysts in the United States, saying that it's important now for South Africa to separate the president or the Trump administration from ordinary citizens in America and most certainly businesses in America, that there's still great appetite to invest in South Africa at this point, as you say.
Yeah. I mean, look, Microsoft is an example of fintech. Technology, you just go down the line. Currently, we are looking at a number of deals in South Africa, and these are your multi-million-dollar deals. We are not stopping. In fact, I would venture out to say that for some of us, we might also see some opportunities because the market is so, jittery, and this is the right time to act and kind of position yourself, that when it does stabilize, you are ahead of the game. So you don't want to, fall back, fold your hands and say, let me see what happens in 90 days. You want to act now and be very decisive. And I think for what we are doing exactly that. Very decisive, continue with our game plan, invest where we need to invest, have this great partnership with South African business owners, bring them to the United States, have them have a bigger market share. We are not slowing down at all.
But it's not lost on us, at least the place where we stand with America at this point, that throughout these 90 days, yes, it's an opportunity for all nations to come to the table and negotiate with America. But most certainly, many have argued that we're not in the most favorable position as South Africa, given everything that has been happening now, be it our policies around land and everything else that has been stated about South Africa, a narrative that is yet to be fully corrected, because this is something that Donald Trump has repeated over and over, even last week when he was announcing these Liberation Day tariffs. He still went on to indicate that bad things are happening in South Africa. So most certainly we're not in the best position going into these negotiations, are we?
No, not at all. In fact, you just reminded me of a great point. So the South African Chamber of Commerce in the United States, part of what we do is to help American communities and business leaders understand the partnership between South Africa and the U.S. Somebody said to me, an American investor said, the president of the United States says that all white-owned businesses in South Africa have to give up 51%. They believe that, they take that as Bible, but I had to kind of help educate and say that's not true. Now, I cannot just say it's not true. I have to back that up with facts, data, and statistics saying that is not true what they are saying. And it's sort of like this rhetoric of not knowing some of these communities and say, no, just, the land reform, et cetera. It is not true. Our job in the United States as South African diaspora is to completely dispel it, but you can only dispel it based on facts, data, and statistics.
But do you enjoy the proximity with the right people that have the president's ear? Because a number of people have traveled to the United States of late, but it seems as though the question becomes, who exactly are you speaking to? Because if you've still got President of the United States, Donald Trump, repeating the false narrative, it then says that perhaps there is an attempt to correct the narrative, but it's not in the right rooms where this kind of message gets to President Donald Trump.
Well, the problem is when you compare his first administration relative to his second administration, it's literally twice as difficult. He's got people in the cabinet that, were in prison for doing, unruly things, and these are his advisors. So when you think about that, you kind of get a sense that I believe that the president understands this is his last term, basically having this big stick, and that he will wield it as much as he can. That being said, from the political side, we should separate the political stuff and deal with what's on the ground, what we see, how can we assist, and how can we help calm down some of those concerns. Again, South African Chamber of Commerce in the US, that's exactly what we are doing. Heracles Investment Partners is a private equity focused on South African investment opportunities. That's exactly what we are doing. Our hope is that post 90 days from now and post this administration, we would demonstrate with actions that what is being purported out there, it is not true. Our job in the US is also talk to investors and, hey, don't believe what's being said. Here's data, here's statistics. Take a look at yourself. Outside of that, here are some investment opportunities. The country in South Africa is wide open, ready and able to do business in a bilateral way. So let's go and take a look at that. So it's that situation, and the only way we can do that is by saying, hey, we are here. Ask us any question. We are open, transparent. We will not hide anything from you.
And then, Aubrey, just before I let you go, just to pick your brain here, I started off by indicating in my intro that sometimes the road to hell is paved with good intentions here. Let's talk about the intention behind these tariffs when it comes to Donald Trump. He has belabored the point that this was all to somehow resuscitate or stimulate the manufacturing industry in that country. And there are those that believe that to a certain extent we have reached the era where it needs to be your country first and everybody else second. Some believe that is myopic. Not in this world, in this era, will you just apply that level of protectionism and not allow for greater cooperation. What do you make of just the intention here where there was an effort to say we want to force the American public to be buying American goods?
It's such an interesting false narrative, because when we think about manufacturing in the United States, the reason why we don't have thriving, that industry is not thriving, it's because really high energy cost. Labor is very high. And so companies, what they've done, they've looked across the board, Mexico, Canada, but they've also looked internationally. China is a perfect example of that. So the idea of saying that these industries and jobs that United States companies decide not to do them, it's false. They are not doing these, manufacturing plants and creating those plants. It's because it's too expensive to do that in the United States. For example, we talk about steel. We basically source a lot of our steel from Canada. Steel, aluminum, Canada, Mexico, and some other parts of the world, is because we cannot fundamentally, we are not able to actually do these, create these plants as we would like, because it's too expensive. And on top of that, you have to factor in the watchdogs in terms of environments, right? So if I'm a big manufacturing company, I want to build a plant in the United States, I have to consider all the high costs in labor, energy, you just go down the line. But I also have to consider the environment. That the watchdogs, I might put in $500 million in a particular plant, and they may come in and say, you cannot continue because it affects the environment negatively. So it's a combination of cooler political minds and business community to come together and said, let's do this in a responsible way. As of right now,
but it seems you want reforms in that environmental space, though, because the priority, it seems, has become business over the environment in most cases. But others are still saying that you cannot top China when it comes to that labor issue that you're talking about, that it will still be far too costly if you're going to try and manufacture in America. So what then becomes the sentiment of ordinary public citizens in the United States currently when they look at all of this, that you've got products being manufactured in China, they are cheaper when they come here because they have cheaper labor. If you're going to manufacture them in America, it's going to be expensive. So what is the broader sentiment of these tariffs?
Pain. Really, that's what it is. It's a whole lot of pain. I mean, yesterday I was talking to a friend of mine. His 401k, very similar to a retirement pension fund scheme, 10% wiped off. So how do you come back from that? And it's going to take a lot longer. I mean, to gain 2% in your portfolio is so difficult, let alone wiping about 10% of that. So the pain is immediately being felt. In the United States, when you think about bare minimum things that we need in a household, things like, food, eggs, as an example, literally the last, I would say, 4 months, they've doubled in price. And this is directly as a result of this administration. The market has dropped 15.6% since this new administration. So it's not just the necessity things that we need, but it's also the market itself, not trusting what might happen down the line, because the moves are so quick and sharp. They are not planned out, and they are not being rolled out in a way that the market can sort of absorb. It's almost like, hey, tomorrow this is what we are doing, and it would affect the market adversely. So the American people are feeling the pain. I've spoken to a number of folks who voted for this administration. They are in tremendous amount of pain. They are saying, $1 today, go to a store is literally like 50 cents because I can't really get anything. The rents are going up from a real estate perspective. Now, if you're going to implement the tariffs, even used cars, the prices go up tremendously because there would be a shortage in the marketplace. It's just a interesting time that we live in the United States. The only thing, again, I can say is don't stop doing what you're doing, because this too shall pass.
But interesting times indeed, and as some would say, probably ill-conceived grand plan by President Donald Trump. Aubrey, thank you very much, though, for your time. Aubrey is from the South African Chamber of Commerce in New York, speaking to us there. All right, let's recap our question this evening. We're asking for your thoughts on the pause, the 90-day pause on the tariffs by Donald Trump to 75 countries. All right, we have a number of your comments already. Tabiso says Trump's 90-day tariff pause was a strategic move to pressure countries into trade negotiations, assess their willingness to cooperate and avoid immediate economic fallout. I signaled that while the U.S. was open to dialogue, tariffs were still a real threat. In a nutshell, says this shows inconsistency in U.S. trade policy. Partners won't take America seriously if the rules keep changing every few months. Very interesting comment there. All right, Robotata says this is a short-term reprieve, but in the long run, these high tariffs will plunge the world economy into recession. Rabutata, this is what many analysts are actually saying, that we are on the brink of some sort of a recession, specifically in the United States. Very interesting comment there. All right, do keep those interesting comments coming. More news on the other side of this break. Do stay with us on Face the Nation. Welcome back. Thank you very much for staying with us. Now, global stock markets have rallied, reflecting relief at Donald Trump's decision to suspend additional tariffs on countries except China. To help us put this into context, we're now joined by Trade Collective Senior Research Fellow Dr. Lebohang Pheko and Chief Economist at Econometrics, Dr. Azar Jammine. Welcome to the both of you to Face the Nation. Thank you very much for joining us. Now, the very aggressive foreign and trade policies by the Trump administration to both friend and foe have brought the world to a point of great uncertainty, as many have said. Dr. Jammine, let's start with you. Just your reaction to this pause. What are we to read into all of this?
Mfundo, can I just correct you? There was a rally yesterday in the stock market, a big one. Today, the markets are going down again. And that is an indication of the skepticism that there is in the world as to whether or not that pause that Trump announced yesterday will really bring relief to the world in the longer term. I am extremely concerned that all he did was literally blink. And in fact, there is a quip now that I see in the media called Trump's Wednesday blink. The Wednesday blink. And
his administration seems to differ, because they're saying he didn't blink, he didn't capitulate. Actually, this was part of the grand plan to bring all 75 countries to the negotiating table, as he's been gloating.
Well, as they say, they would say that, wouldn't they? That is the obvious reaction to the dramatic decline that we saw in a lot of people's wealth and well-being in the last few days on the back of what Trump did. In fact, some reports suggest that the reason he blinked was that he came under tremendous pressure from top CEOs in American business, in finance as well. A guy called Bill Ackman, another one called Jamie Dimon, who heads up JP Morgan. These are huge, top businessmen in the world who told him, don't be so stupid. And for that matter, Elon Musk himself was quoted as having called the architect of this tariff regime, a guy called Peter Navarro, a moron. He called him a moron.
We saw that back and forth.
Yeah. In other words, Musk himself is terribly concerned about what these tariffs are going to do to his own companies. I think, yes, it's a nice spin to say that, they came and I was quite shocked at the language that the President of the United States used about how 75 different countries, one by one, had come to him appealing for some sort of, please help us out, let's form some kind of deal. There is some truth in that, but really that's a big excuse for what could be a dramatically negative impact on the world economy.
You're very generous, your use of the language. You're very euphemistic, because he was not diplomatic at all when he expressed that the countries have indicated they were not necessarily appealing. He went on to say they were kissing or trying to kiss him and come to him. So you're very euphemistic, and we like and appreciate that. Dr. Pheko, your reaction to all of this?
Yeah, thanks so much, Namfundo. A few things. I think we can see that this is a very erratic and it seems quite a randomized form of internationalism, especially and extremely counterlogical, particularly at a time when countries have been moving towards greater forms of cooperation and solidarity. That is why the exit of the United Kingdom from the EU, the Brexit, was absolutely counterintuitive given today's way of doing collective international relations and trade, and almost trading in community rather than isolationist. You have had, for example, rules-based trade, which has been governed by the WTO, itself granted a very problematic institution, which is full of its own power relations, top-heavy power relations in favor of particularly global North European, US countries. However, it has certainly provided some kind of a stability. And for the past 10, 12 years, it's clear that the United States has had this go it alone, literally circumventing the World Trade Organization and really putting to bed its own playbook, as we can see at the moment. What the WTO wants to do, it tries to promote things like non-discrimination, where WTO members have to grant all countries, the good trading terms. It also speaks about reciprocity, binding commitments. We haven't seen reciprocity or binding commitments in any of the last few weeks of Trump's tariffs. Predictability, stability, for example, and the rules-based system is supposed to prevent these sudden arbitrary trade barriers. And in fact, one might argue, I think the trade lawyers, we should probably call on them, one might argue that everything that Donald Trump is doing runs counter to the spirit of the World Trade Organization, a problematic institution by all accounts. But I think I'd also like to pick up on Fundo about that. This isn't entirely one-way traffic. So, for example, we have seen an increase, not a huge one, but we've certainly seen an appetite for boycotting of U.S. goods, U.S. consumer goods in places like Australia, Italy, so certainly Canada being at the front burner of that, having borne the brunt of the potential of being annexed into as an American state, and the huge sort of economic patriotism and quite resentment that they're feeling towards that. We also know that the possibility of travel and tourism towards the United States is anticipated is going to drop by about 5.5% this year. So even in as much as it's an uncomfortable, bumpy ride, and that's certainly this is not the bingo what was on our bingo card in January 2025. We should also bear in mind that as other nations, we have our own alternative ways, perhaps, of going against this unilateralism and this erosion of predictability and stability. But
what
also
are
to remember,
those ways, Doctor? Pardon me for interjecting there.
No,
but
please
what
do.
would be those ways?
Look, we also can put in place tariff policies to protect and to nurture some of our own domestic industries.
But are we in a position as South Africa with such a small economy? Because already, at least South Africa has indicated they will not be reciprocating here. If anything, they want to head to the negotiating table, and many people have said that is a wise decision. We're in no position to be reciprocating.
I disagree very strongly. And I don't think that it has to be a fire by fire. We don't have to announce these things. We know that, for example, as a country, we already have wheat tariffs, and we have wheat tariffs for very good reasons. These wheat tariffs are there, they're set at they used to be, I think, at $213 per ton, and I think they were increased to $294 per ton. And those tariffs vary. They vary depending on the cost, the 3-week index of the cost of wheat imports and exports in a given window of time. So we adjust our tariffs to ensure that we are always protecting our own markets. We also have in the past we have had put tariffs on our on our own automobile industry, often in the range of between 20 and 25% to grow our own automotive industry. Countries like Nigeria as well, they have often levied tariffs on some of their really important industries, like the canned tomato, canned food products, which they use almost as a staple diet in their food. In the rice sector, countries like Mali and Senegal, they have also imposed tariffs at different times. Ethiopia, I know at some stage we're also imposing tariffs on their wheat and on their lentils, because that's a huge part of their own domestic, major domestic product. So I don't think that our own economic sovereignty should be viewed as we are now instigating the bully. And I also think I really am very much not in favor of us as the rest of the world cowering in the presence of this big bully. I really think that we have a lot more autonomy and sovereignty, and that there are many institutional, policy, and even trade and tariff bindings that we can use and utilize at this time in ways that can protect ourselves.
I suppose the strength will come if all those 75 countries share those sentiments, because the problem would really be when you've got some of those 75 already entering those negotiations and getting in there not as bullish as one would want, because then it would result in a few countries being singled out, like what we're seeing with China. But Dr. Jammine, just to bring you in here, of course, many share the sentiment of Dr. Pheko here that, if anything, Donald Trump's erratic decisions have all but upended the global trade architecture as we know it. These are very uncertain times. But there's that element of the grand announcement. We heard that the continuation of the trade war between China and the United States will continue. He's imposed 125% tariffs on all goods from China because they retaliated. Now, some say that China was always the target here, having been cast as that central antagonist in Trump's trade war narrative. What do you make of just that singling out of China?
What I make of it is that the United States is scared of losing its global hegemony of the world. But in what it is doing right now, it is actually about to implement or shift the baton to China to lead the world. And that is what is very unfortunate for the United States. In many ways, the motto is MAGA, Make America Great Again. I think it should be Maya, Make America Insignificant Again. And that is because America is going to be increasingly isolated from now on. And everyone's going to be looking more and more to China to actually deal with, including South Africa.
But will America honestly be isolated? Because again, you've got these 75 countries. There's been an indication that they want to negotiate. I think the strength would be in the numbers, or if they were acting in unison. But it seems many of them have the intention to negotiate terms for their own nations. So how then would America be isolated? Because it seems it's a divide and conquer.
The point is that America is already isolating itself by imposing the 10% blanket tariff. And don't forget, that is not all. There is also a 25% tariff on all imports of steel and aluminium products, as well as automotive products. So it's pretty harsh already, even without the reciprocal tariffs that were paused yesterday. And as a consequence, I think the world economy is going to go into a severe downturn. And, you know, when we're talking about our bilateral relations with the United States and what we should do to protect ourselves, or how to cope with their tariffs on South Africa, my real concern is not those. Yes, some of our automotive industry is going to lose badly, and the citrus industry and the wine industry may be affected. But more of the greater concern for me is the overall impact on the world economy and via that on South Africa. Already we have seen a lot of commodity prices outside of, except for gold, ironically, but gold is unfortunately no longer that is significant in South Africa's economy, but things like platinum, palladium, copper, and some of the agricultural product prices have been falling quite sharply because of fears that the demand for commodities will decline if the world goes into a major downturn. And South Africa, being a primary commodity producer, that's where it's going to hit us most, not whether AGOA goes or we lose some of our ability to export cars to the United States, which but given the magnitude we could, there are opportunities for us to divert those exports elsewhere.
And I suppose that's why there was this greater push for beneficiation, because there were some who were forward-looking, thinking of a time when there would be economies that decide to put this much pressure on South Africa, so we need to somehow reinvigorate our own manufacturing industry. But Dr. Pheko, let's talk about just that point around the citrus space, that here, when we look at this space, there are those that feel that there should be no need for panic, because here you're talking about seasonal products, that what happens is you've got America that when they are now off season, they would then be sustained by the likes of South Africa in this instance. So it actually would be more detrimental to the American economy to actually have tariffs on these specific products here, because if they come into the market, they'll be far more expensive, and really the people who will be most upset will be the Americans, because they'll still need to sustain themselves with products coming from other countries because they'd be out of season in America.
Yeah, I mean, I think this is also where we begin to think about the impact that we are having on people's taste. So there's a lot of this is to do. I mean, I've noticed in the times that I travel to Europe for work and so on, they have a particular palate. So you find mangoes, which we don't find here. You can find mangoes every day of the week, every month of the year in some of these countries. Same in the United States. The last time I was there last year, just before all of this mayhem came into play. And certainly I think what might happen in that regard is that the cost of competitiveness, the cost of export competitiveness into the US is going to be diminished. It could also mean that there might be an uplift of 5 to 10% on the cost structure, which could potentially render South African citrus slightly less competitive compared to suppliers from other countries. It also means that we might have to think about export price increases. With the imposition of this tariff, the cost per unit to the US, for example, it might increase. But I would also like us to think around what it means, not only in the context of these short-term volume declines. I think that we could also rethink a much more holistic way of viewing this. The one is whether we can then export channel shifts. And if US markets become less accessible as on a preferential basis for this citrus because of everything that's happening in the middle of this pause, these 90 days, we should ramp up our agreements and our arrangements and our, economic solidarity with the BRICS nations. And there are several countries, the BRICS Plus formation, to think about and to potentially ramp up our relationships there. We need to be always thinking around the Middle East and other emerging markets across Asia. We should remember that we are part of the SADC. We should also remember that we're part of the African Union, and perhaps put into place and fast track the rhetoric that we've been talking about around, for example, the Africa Free Trade Agreement. Yes. This is as good a time as any for us to begin to put that into place. These are not quick solutions, but I do think that we already have the foundations and we already have the architecture in place. I think lastly to also say that I do still want to think that in exactly in the context of this, so that the United States is not our only export partner. Yes, it's a significant one, and it's been a significant one, but there are multiple. There's the European Union, which is an important trading partner, the United Kingdom, which is an important trading partner, and then Germany, as an entity separate to the European Union, which is also a very important trading partner. And as I say, within the SADC, within SACU, the Southern African Customs Union, by the way, we already have a tariff rationalization mechanism, which would enable us, which already enables us, in fact, to begin to trade and to import and export at highly favorable rates. And in fact, when we remember that the bulk of our exports on the continent are with external parties rather than within the continent, we as a continent have long been missing out, and I've been saying this for many years, have long been missing out on an internal market here. Continents like Asia, the bulk of their imports of their exports are within the continent to the tune of almost at least 60%. The same with Latin America. It is only this continent which only trades amongst ourselves to the tune of about 10, 15, 20% at most. So we are the potential. We internally are the market. And I'm going to insist, Sister Nomfundo, that we stop prioritizing America. And I agree absolutely with my colleague. Let us make, America insignificant once again.
But I duly note the use of the term here where you say rhetoric when you refer to the Africa Free Trade Area, meaning that we're really underutilizing the space and we're not trading. Most certainly. So I suppose it's an indictment on government that if it's considered or viewed as rhetoric by ordinary citizens, then perhaps they should feel shame to a certain extent to say it's underutilized, we need to trade among ourselves. But I just want to draw in some of our audience. They have a few voice notes and then we can engage on some of those voice notes. Let's just listen to some of those. All right, a very interesting conversation, of course, that we're having here with Dr. Azar, Jammine, as well as Dr. Lebohang, Pheko, just discussing a number of issues pertaining to that 90-day pause. It seems everybody is of the view that Trump in this instance did blink, he capitulated, and not necessarily that this was all part of the grand plan to have 75 countries at their doorstep attempting to negotiate. I believe we have those voice notes. Let's listen to this first one. All right, we do apologize for that. We'll bring you those voice notes in just a bit. More news and debates on the other side of this break. Do stay with us. Welcome back. Thank you very much for staying with us. We're still in conversation with Dr. Azar, Jammine, as well as Dr. Lebohang, Pheko. We're discussing the 90-day pause by Donald Trump that was announced on the tariff. Of course, China will not be benefiting from this 90-day pause, but there's also a 10% baseline tariff that has come into effect, so all countries will be affected by that. Let's start with just recapping our question tonight. We're asking you for your views on this 90-day pause on the tariffs. What do you make of it? Let's look at some of your comments before we go back to our guests. Bono says it's going to backfire and the Americans will rue the day they put that man in charge of their country. In fact, it's already backfiring. I heard that China has imposed 84% tariffs on US goods. This will also have a significant impact on our economy since we're trading with the United States. Wazalendo says this whole movie was for two reasons. First, market manipulation to thank campaign donors. Second, weaken China economy. Other countries were just a diversion, hence the 90-day pause. Melikaya says, hi Mfundo. Hello Melikaya. Trump is reckless and was overwhelmed by the market crashes. He always praises himself and blames Biden or China. Very interesting views there. Dr. Azar, I mean, you've heard there that the intention, among others, was to tank the Chinese economy. China's economy most certainly faces a massive hit from these punitive tariffs. But the biggest question is, would the continuation of that trade war now between China and America impact the rest of the world? And most importantly, South Africa?
That is my biggest concern. It's not the disappearance of AGOA or, whether or not our relations with the United States have deteriorated. My concern is indirectly if this trade war between America and China, the world's two largest economies, escalates or even continues at this level. I mean, it's quite dramatic. You're talking about the cost of iPhones, for example, virtually doubling. I mean, that can have a dramatic impact through the rest of the world, and South Africa would be negatively affected. And as I intimated, we're already starting to see some of the impact negatively in terms of declining commodity prices, and we suffer from that. ourselves.
Dr. Pheko, your take on that, just the isolation of China, will it have a significant impact on other economies outside of China and the United States?
It's bound to, unfortunately. I mean, remember that because of the nature of global economics and the architecture of outsourcing and offshoring, which is now the modus of operandi of a lot of international manufacturing. So this idea of bringing back American jobs, even Apple phones are not really made in America. They're not really U.S. products in that pure sense of the word. And when you think about things around rules of origin and as they govern, imports and exports at the WTO level, the rules of origin of where things are actually produced becomes quite important. And a country like China, which has perfected the art of low cost and increasingly decent quality and fast, quickly produced goods to be manufactured either in components or as finished products to the rest of the world. They're not necessarily that fast about who puts their stamp on it. They're made in wherever stamp, but what they do is they get stuff out. They do so, I think, sometimes at the cost of terrible working conditions, which is a conversation for another day, poor cost. And I don't think it's a model that we should necessarily emulate. But I think that with that, they will also be looking inward, and they'll be looking at ways to recoup their own commercial footprint. What China has, however, what countries like the two largest populations have, China and India, what they have is a population. So essentially, Nomfundo and the viewers, they essentially are a standalone industry, a standalone market on their own. This is one of the reasons why goods and services move so quickly within regions within China. And I think if anybody who's had the opportunity to have a look at their production model and to visit, some of the sites there, I've had the privilege of doing that once or twice, and it's quite fascinating how different nodes across the country, different provinces have been set up to produce different different items. You have your manufacturing node for food, you have your clothing, you have your shoes, you have your automobile, and so on. There was the first time that I actually saw that you could fake a Land Rover was in China. And if you're not looking too closely, hey, for a quarter of the price, it acts like a Land Rover, it drives like a Land Rover, but it isn't a Land Rover.
Exactly.
Now, what this is going to do in the context then of these tariffs is very interesting, because I think that they can actually look within and find a market within. Remember that China is also the country that has managed to move millions of people out of poverty over the last 10, 15 years and in tangible ways. They've actually managed also to move people in rural communities as well out of abject poverty, of course using a model that I'm not particularly fond of, but it's something that they have done. So what this also potentially does, though, is also means that us trying to export to China and import from China, if they're having their own internal flux, they may not necessarily be as attentive to. They might want to protect and raise the cost of production for themselves in order to catch up and in order to compensate and to subsidize for what they might have lost from the U.S. And I think another thing that I'd like to introduce into this conversation is what this means, Nomfundo, for subsidies in different sectors. How do we protect, back to your previous question, how do we protect some of our key sectors through subsidies? And again, this is not new to South Africa. Pre-1994, remember that the apartheid state used to provide agricultural subsidies to farmers and to different industries to guarantee that there was a market and that there was price control. And these are the things that we need to be thinking about.
So if we, pardon me for interjecting
there,
Dr. Pheko, just in the interest of time. So if we had to put it into practical terms now, this is something that the Department of Trade and Industry will now be seized with. They've at least indicated that they're mulling some sort of an expanded subsidy of sorts to cushion the vehicle industry. So if they had to come up with some sort of a plan to cushion the industry, according to you, what should they do right now?
I think that they need to really think about how they are going to protect the sector, protect the metal and to protect the steel sector. We already have an automotive production and development program as well. It's an initiative that was supposed to stimulate and increase production in our car manufacturing sector. It's supposed to offer manufacturers customs rebates and production-based incentives. As I say, Nomfundo, we actually have a lot of this stuff lying around waiting to be put put to good use. We can also provide incentives for electric and hydrogen vehicle production, potentially, especially as we think about aligning towards more sustainable transportation and for export. South Africa actually has already introduced, I think it's 160%, a huge tax deduction for investments in electric and hydrogen powered vehicles, and also the expansion of of car industry incentives. So in response to these external challenges, including this 25% of import tariffs by the US, the government is already contemplating existing industry tariffs, as you rightly say, that the trade and industry minister was already talking about modeling different kinds of support measures to mitigate what we see around us. So, I mean, they are already, and also consumer incentives.
Dr. Pheko, thank you very much for your time, actually. To both of you, doctors, thank you very much for joining us for this very insightful panel discussion. That was Trade Collective Senior Research Fellow, Dr. Lebohang Pheko, and Chief Economist at Econometrics, Dr. Azar Jammine, talking to us about that 90-day tariff pause that Donald Trump has announced. And unfortunately, that's where we leave it. Time flies when you're having fun. Good night.